Hello and good morning. I can see that we are having a little bit of a network issue, but hello and good morning, and welcome to Behind the Markets. I am your host, Munyuma Mutwale. I'm with my co pilot, Vernon. How are you doing?
Today actually feels like a Monday. I feel like working. It's a time to make money and time to be confident in yourself because that's where your money making tricks, of course, are coming from. So I feel really excited
Oh,
for like this one. How are you?
I'm good. I'm good. I'm good. It's before you think of it as a Monday. Tis a Tuesday, brother. Tis a Tuesday. Because everybody thinks of this as Monday this time, but it actually is Tuesday, and it is because it was Good Friday, Good Tuesday. We're kind of getting back into the groove of things. So now we're trying to get back into what we call the shortened week. Everybody's now going to try and get back to their full swing. But let's get everybody back into the markets. We don't have much, especially on the data, because obviously Good Friday go all the way to Easter Monday goes all the way, and therefore we have no live market data updates. But we do have some of our daily deep dive and a blessed good morning to you, Priscilla, who has joined us today. And our first daily deep dive, Vernon, has got to do with community finance. So we did actually see one of the president's advisors post up something quite interesting about community finance programs. So I just wanted to share it and then try and break it down to see what discussions we can actually start having around it, because this is actually trying to get a more sustainable finance model, or what I call the poor man's banking system, or at least the everyday man's banking system. I don't want to say the poor man's banking system, the everyday man's banking system. So this is just a clip that I actually grabbed from a bit. Just going to play about a minute of it, so that we can then break it down and discuss how can these things be worked on. So here you go.
Shared with you guys is that the money was raised through various private entities. We have a way in which we communicate with people to say that instead of putting money in Chilimba or putting money in, maybe a fixed deposit or this, that, let's create a community fund, which we can now apply to people like yourselves, right? So you can use that capital to revolve amongst each other, interest free, so that for a period of time, I know how you guys have agreed, you chose a leader to direct who receives first. So the first 20 benefited 5,000 kwacha each. Then so every month as you contribute, it goes back to the central account. Then it goes back to new recipients. So everybody gets access to it. So no one gets left behind, because not everyone received, right? Because I mean, how many of you here? Like 80, 70? So obviously out of 70, 20 received. So we expect that again next month there'll be other recipients, additional 4. So it just keeps on sort of revolving. And the good thing is that you can see, right, how much is there, who's receiving, who's paying back. And that's the beauty of having a community fund.
Okay, so that was just a quick clip of him discussing it, trying to break down a new model of trying to approach funding amongst people, because obviously access to capital has always been the number one complaint amongst the Zambian self-employed or the Zambian small business community. Now, community banking has always been the better option. The reason is this: big banking, especially with the amount of consolidating that's going on amongst the big banking, is rich first banking. That's always going to be the case. Okay, when your banks are getting bigger and they're starting to consume, like last time we saw a Megazord bank coming together of Access, was it Access Cavmont, which was sitting as Access, and now Access has acquired Atlas, and then you're gonna have one mega bank, which was basically four banks made into one. You're going to have a problem with the average person being able to walk in there and access capital, because most banks, unless they're going to start using artificial intelligence, are not going to start running towards trying to get money towards people. So that's obviously the number one issue that you're always looking at. So it is a good concept to start trying to strengthen the local community finance systems. Now, obviously the same Chilimba system, and we have Chilimbas, we have village banks. These things have been operating, but they've never been formalized. Okay, they've never been properly structured, and they've never been formalized. They always remain informal, and therefore subject to mismanagement, misuse, people running away with money, people exiting the schemes prematurely, therefore leaving the people who had been contributing early to not having access to that capital. So usually this is where the problems come in with the current Chilimba system, is that it has no formal structure. Now people are always saying, no, if it has a formal structure, it'll be regulated and therefore the problems. But yes, you do need some sort of regulation to bring order to it. Okay, that's like asking, and I'm sure Lucky can agree to this, or maybe or not, he'll give us his comments, that you cannot, in as much as we want football to be a free-flowing sport, you cannot remove the officials and the referees. Otherwise, it'll just become a cage sport. Okay, so you do need somebody to make sure that the rules are enforced and the game stays standard and the game is fair grounded. So I think looks like the first step of us having some sort of political will to try and formalize the community finance systems. Now in America, they have something called the Community Bank, also the Credit Union Act. Now the Credit Union Act therefore gives a lot of the same official powers that banks have, or at least small banks have, to small community banks. And what you often find in their system now is that a lot of people, especially in the lower parts of the community, and also the immigrant and formerly disadvantaged groups of people who maybe were marginalized by racial prejudice, people who have been held back in the wealth system for a long time, access their capital at decent rates through the community finance system. That's what you're trying to help support. Access of capital through the community finance system, allowing the big banking system to support the bigger parts of the economy. Because what's going to end up happening is your big institutions, I always give the example of Zambia, who's trying to raise $100 million, or your Zambru, who's trying to do an $80 million expansion in the next year. In fact, by the end of this year, they're vacuuming large amounts of capital out of the banking system. And they're not getting that capital from outside. They're getting it from the domestic banking system. And if they're going to keep getting it from the domestic banking system, that's going to put a lot of pressure and then wipe out the locals who are trying to, or the smaller locals who are trying to get financing. So one thing I do, as I've said, is this is your option, Vernon. Trying to make this more formal. Now, do you know, Vernon, that the credit unions in the developed world actually even have branches and ATMs? Your credit unions is effectively your chilimbas and your village banks. Imagine, Vernon, a village bank so strong in Zambia that it even has branches, office branches, and that it even has ATMs for people, or at least even has cards for people. That's the level you can stress these things if you grow them. And that's transformative because that's the capital people can access faster at more reasonable cost than they would even getting into a major bank. Now, a few issues, obviously, because these things have remained informal. The microfinance system still lends to the Zambian people at 70%. People in this country have got very high interest rates that we lend to each other. So that Galoba system is usually what distorts the village banking system, because people expect what they would do as a Shylock themselves, where they're asking you for 20-30% in a month. They want that back from you. As in, this is the problem. They want to play the Shylock role instead of comparing the village banking system or the community finance system to depositing in a bank. And that's what he said. He said, instead of putting your money in a fixed deposit, let's try and see if we can do a rotation system around here. Now, eventually, if you try and build it well enough, you can actually get a good financial circulation system that is legitimate, that works, and it is overseen properly so that people's money doesn't go. Now, the only step that's missing, that seems to constantly be missing, Vernon, and I'm going to hand this back to you just now, is the deposit insurance system. Deposit insurance has always been an issue in Zambia, because usually when people have their money sitting in village banks, microfinance, or small financial institutions, there's always a BOZ announcement that there has to be a liquidation because somebody is failing to pay people and they've run away with the money. Okay, so these are usually the issues. So what they've done in the US, for example, and even in Germany to an extent, is that they've insured deposits of the credit unions, which is just the equivalent of our village banks. So if we can get these things deposit insured, running using basic systems with minimal and light touch regulation, so that we don't create barriers to them forming. But if we can try and create some systems to help these people and actually get access to capital more to the bottom parts of the economy using some sort of formalized system, we might be able to improve this problem and take a bit less pressure off the banking system. Now, yes, There might be some resistance from the formal banking system because deposits will no longer sit with them, and therefore they end up losing quite a large scale of retail deposits, which is what they use people for. They take your deposits and then they lend it to the bigger institutions. But, and I say this again, but it should the biggest priority should be the bottom parts of the economy getting access to good savings products where they can get higher interest on their savings and lower interest on their loans. That is the big thing, because the gap, Vernon, if you are a retail person and you go try to get a retail deposit, you're probably going to get about 8 to 9% on your deposit max. And then you're going to end up getting about 30, you're going to end up being charged 40+% on your loan. And if you're going to a microfinance, you're getting about 70% charge on your loan. That spread is too high. Okay, the institutions making money on that difference is too high. So trying to create the community finance system narrows that spread and tries to bring sanity to our financial system. I don't know what your thoughts are, Vernon.
I think it's I'm actually wondering why possibly up until now we haven't been able to materialize all of this. The appetite for people to save is huge and it's very encouraging. And I think that even coming up with the some village banking is already translating that people are looking into such kind of initiatives. But I would say how to formalize. I think that's where the challenge has been, and I think formalizing it seems to be a bit too technical, too involving, a lot of paperwork, and so much, of course, to be done. So that's why they feel, you know what, just book. We have somewhere to put our monies. We lock them up. Everybody makes deposits when we want to. And that way, it's easier. It's less complicated. And like you need to queue up, make lines, sign. That's where the hesitation comes in. And for those, of course, who've been able to operate the same village banking, operations, we have seen notably some of them actually it has been rather successful and people are quite benefiting from it. Though the interest rates are not all that encouraging, looking at how basically things have been performing, and are having the experience on whether of course you're looking at the formal rates or the informal rates just as a group, but ultimately. Seeing that this kind of formalization could come in place, this could really do a lot of good in just capital, access to capital in general. I would say capital, to access in Zambia is there, but the interest rates and how you can actually access the capital could be a challenge. And this would be one of the avenues that a lot of entrepreneurs could take to, be able to facilitate for more and, maybe capital boost as well in startups. Something in the news they, are quite, the Ministry of Youth and Sports were only able to recover about 3 to 4% of the youth empowerment and grants and whatnot just earlier. You can look at the huge gap missing out. You can't recover 3 of 100. That means there is a lot of work that has to be done, a lot of structuring. Otherwise, and with this initiatives of village banking being formalized, made even more and more organized, I think we will stress the government less on grants and borrowing and loans and CDF and be able to access monies and capital elsewhere. I think that should be the trajectory, and see how this can work for us and not, find that, make it a conduit to people, their money is out of the village bank. I think it should be used for the greater good for everyone.
So hear me out, Vernon. Here's a thought. Here's a thought. And anybody who's listening, here's a thought. With every CDF, okay, why are we walking away from the probability? And I know people can rush to this, but why are we walking away from the possibility of constituency banks? Okay, with each CDF actually formalizing an actual savings avenue and a lending avenue, one that actually utilizing it to create a constituency bank. Okay, something at the lower level, because the rest of the banking infrastructure should now be aimed at the small shopkeeper, the regular person. We should be trying to get people to operate down at the bottom there together, trying to unify people's financial systems. So if you're going to give out CDFs to people, can we start considering, in fact, I will actually write that in as part of my budget submissions this year. And I know that the Minister of Finance did actually start opening the doors for budget submissions, but each constituency should start working on, in fact, give us your thoughts. Okay, and I know people don't trust their MPs with money. That's why they may respond negatively. People don't trust their MPs with money, but you can form boards and things like that. But I'm actually thinking that there should be
Yeah.
some sort of banking infrastructure down at constituency level, even if we're going to. Because what actually helps, by the way, with the cost of capital being controlled, like in China, is that every area, every municipality, every locality has a bank. And therefore, the Chinese system allows the private banks to exist, but the private banks cannot charge too much because the public or the locality banks are constantly there to offer a cheaper option. Now, they don't just give out loans
Yeah.
for dololo, they actually give them out expecting that people are going to have to adhere to certain circumstances. But if we're going to have the CDF system, it might help to actually form some sort of constituency bank at each level to encourage banking down at the constituency level, giving these MPs a little bit more work to do as well, and also their committees and their localities a little bit more work to do, and especially in the non-urban areas. And I don't actually find that it might be more helpful. So there are functions that we can try and work around here. But one of the main things we need, here's some things we need to utilize. And I'm going to start by the trends of finance. The first trend of finance is what we call 3D. Okay, 3D is what we call the first trend of finance is what we call 3D of banking, and the 3D movement in banking is digitization, democratization, decentralization. So if we focus on these three trends, what can you offer? Because those three things open up any service to many people. So if you can have digitized services, if you can try and turn the village banking system digital, that's step one. Then you try and make sure you decentralize it. And that's what we're trying to do if you're talking about constituency banking, if you're trying to talk about each group of people having their own accessible point, because decentralization makes things more accessible. Then democratization of finances, then allowing them to have the power to decide down at their level. Because the problem with the finance system is that a lot is decided at the top level. Now, how does the major banking system then play into this? Is that the major banking system can then become the banking service wholesaler. If they can now get their networks, their systems, their backends to then become a service offering to these groups of people so that they don't have to set up these things. Okay, if there's an integrated mobile to banking system that can allow a lot of these people some sort of platforms that they can access either through USSD or either through mobile, through smartphones, which a lot more people have than we think these days. People, a lot more people have smartphones. That smartphone is an actual way that we can try and work on creating some composable banking service for the lower ends of society. Now, if we have that much political will, then we should be able to then gather up some momentum on it. That's my thought. But what we could do is also look at constituency banking, constituency banks. What are your thoughts, people? Should the MPs start also considering forming banks with these things so that they can play a more active role? Therefore, whenever they get their CDFs, they know how to actually front lend them, and therefore we start opening up some sort of model that can turn finance a bit different here. I know that unfortunately, public institutions running banks like we had with Zambia Development Bank, where they only, I think, was it 90% of the loans were in default. Jesus, like those are kind of the messes that we were seeing, and the level of corruption, unfortunately, we were seeing with the loaning system. But I'm sure we can pick up these things and improve them a little bit later, a little bit as we go along. But number one, deposit insurance. Before we touch anything, people, we've been talking about the deposit insurance bill since 2011. Okay. In 2011, we've been talking about creating deposit protection legislation. 2019, central bank governor gave a speech about government promising to take to parliament the Deposit Insurance Act. 2021, we were talking about the deposit insurance bill still being worked on. How is a piece of legislation taking so long? What is going on that people are failing to get this thing to move? And I keep looking, every time I keep checking, have we passed the Deposit Insurance Act? Have we passed the deposit? And why is this not? And maybe Vernon, and deposit insurance just simply means if a bank goes under, okay, the depositors to a certain extent, not the big ones, but at least the small ones, their savings are protected, and the central bank, or at least a central bank, will step in, or they've got some sort of fund that they've set up, will step in and they'll cover it. Okay. Now, the problem with deposit insurance, sometimes it leads to hazardous behavior, but at least it shows that, and every bank has to start paying insurance premiums to this fund, so that this fund then has the money to bail out a bank to protect the financial system. And right, because right now, every time the central bank has to take over, the central bank just has to just wake up and just take over, and protect the bank from failure. So why can't we get a proper deposit insurance mechanism? How, as a country, for over a decade, failed to get this correct? And this is a standard part that we all should be looking at in terms of it. I don't know, Vernon, what's your thoughts before we move on to the next part?
I'm thinking it's probably, a responsibility for you guys in the financial sector really to push the agenda, because honestly, you have a better understanding of what really is going to benefit and who's going to benefit essentially. So honestly, I feel you should be spearheading this, and I feel if you can ask, people who are supposed to present the bill in Parliament, they will say if we can have more support and more people, really behind this bill to be enacted, they will say we need economists, we need bankers, we need people in the financial sector to be able to, go on with this. With less support, we feel, it actually may not be as necessary to push this bill into enactment. I mean, it has been pending for at least 11 years. And nothing is being done so far, at least progressively. And if we're going to reach that extent of it being enacted, I think also probably the general public should also be, taking a role, a while too, to see that this thing actually can be pushed further. Knowing that, of course, the general public also will be quite, the beneficiaries from this thing, of course, if it is enacted. But really is very important. I think no matter how mismanaged a banking institution can be mismanaged, that is this we know is that we have to deal with our monies, and we expect our monies in any case scenario to still get our monies back, and that bill should just but not be enacted for people out. So I don't know when and how people can actually come in, just the general citizenry, and most essentially also people in the natural sector, to be a thing, and possibly a bit more sensitization. I feel with a really clear scenario of what, of course, is happening and what is actually think and for everyone. I think they'll be quite more interested to just go on and probably even offer more support, effort to see that the bill is enacted.
So again, and look, I guess the lower end of all of this is one, deposit insurance, two, potential constituency. We did get one answer from here from I'll try and get his name. Conchulas Nyangwa said constituency bank is a great idea, but he said brick and mortar will be expensive. Therefore, ultimately, it will enable access to digital channels with support agents in each constituency. That is correct. So try to leverage technology is what exactly we're going through. Good morning to everyone who has joined us, and give us your thoughts. What do you think? Should your MP form a bank, and therefore to actually try and help banking be utilized? No, as in that's a thought. Should your MP form a constituency bank? Doesn't have to be brick and mortar. Can actually be technological. You can have digital. In Kenya they've got fully digital banks, like no branch, bro. Just like full digital. It's an app on your phone. The way mobile banks are, just an app, and you're fully banking digitally, and you can operate, and you can access a card, everything. And I think some of our banks are to the point where you can just download an app, register, and start going. So I mean, we're going in that direction already. So that's just a thought I wanted to give based on that conversation. Give us your thoughts to anybody who's joining us today. What are your thoughts? Should your MP form a bank? And therefore, what do you think about community banking? Should we start going more to community banking as opposed? And I think, can our tech guys put that question in the comment section? Should we start dealing with at community finance level? And two, should your MP utilize at least part of their CDF to form a constituency bank to try and help support banking and finance access to capital at the bottom base of their economies? Just a thought. Now, getting into other parts, Vernon, today, as of our deep dive, today we did get data over the weekend of global food prices. Global food price. Pardon, sorry. So I don't know if you're trying to say something.
Yeah, I'm saying, about the, trickling down to, constituency banking system. I don't know. Our leaders, when it comes to that level of leadership, I'm not sure if they're really as interested or actually have thought about doing something like that. I feel with the leaders, they're more on replacing the previous guy and just continuing and possibly doing it faster and quicker. It's all about development, but just doing the projects and
Vernon, you've turned into a robot. Unfortunately, we've lost you.
but my question,
You're back.
all right, I'm not sure if you're able to hear me now.
No, now we can. Yeah. No, we're getting to your point that our leaders may not be too anxious to try and make changes of such a sort.
Mhm. All right. Yeah, that's my thought. I'm thinking maybe the members of parliament, are they ready to take development in that direction, and are they basically?
All it takes is us. It just takes the citizenry being willing to push such agendas. So this is why I sit on a platform like this, bring it out to all of us. And all it takes is a group of people coming together on an idea. See, this is the power of an idea. The power doesn't start with the politicians. It starts in the soft power of an idea that sits amongst society. And then we table it with our people saying, look, this is what we want. And this is what we see going forward. So as society, we need to work at this idea. And as you can see, there is political will to try and create community engines for finance. There is already political will here. There is infrastructure for constituency level finance. This stuff is already in play. So it's all about now squeezing people to start doing it. The problem I have with our citizenry is that faga pressure only exists during elections. It never exists during the tenure of people to try and bring ideas to them. It's all about trying to push who's in, who's out, instead of, and Zambians have this wait until elections mentality. Come together, trust me. Politicians pay attention when people start to form together. Okay. And I'm not talking about forming a party. I'm talking about forming around an idea across many party lines, across many language lines, across many divisions of society. Come together on ideas. And when you come together on ideas, table them with the people in power, and they will see that the unity of the people is most important. Power of the people, Vernon, stands in the unity of the people. And the things that can unite people are two things: ideas and culture. Okay, those are two things that unite people: ideas and culture. So if you can bring people together on new ideas and new ways of doing things, that brings the attention of the political class to take action to things. But you cannot sit there and wait for them to come up with their ideas. That's not going to happen. Their main incentive in life was to get to that office. Now that they've gotten there, they have no incentive to do anything except for the threat of society changing faster than they are, because then that'll mean that their next election bid will be in danger. But if they can see you moving towards an idea, demanding upon something, it is growing in society, they have a tendency to listen. And you don't even have to do it in a threatening fashion. You just have to be consistent about bringing it to people. So here it is, thrown out into society. Now let us, this is the thing about this generation, get off the hype of what's happening a lot and put these ideas together. That's what we just need to do. Put this stuff together and move with it. Okay. But anyway, as I said, let's start by getting people's thoughts. What are your thoughts? Should your MP form bank? Should they not? That's an idea. Whatever way you want to do it, that's up to you in terms of what you're thinking. But should the concept of each constituency having some form of a banking service to try and make sure that the people of that constituency who may not be able to access credit in the mainstream systems at least have something that's touching closer to them, that is not just directly at in an informal management where it's just your MP who decides how to do things. Okay, these are just some thoughts to think about. Now, Vernon, back to what we're talking about here. We do have the food and agriculture and the World Bank month-on-month global food inflation data that came out recently. Global food inflation is showing that we're starting to see deflation, and we're continuing actually to see deflation across various sectors of the global economy. As you can see here, food prices have dropped globally by 2.2% in March, and they dropped 0.6% in the previous month, mainly driven by the drop in cereals prices and also drastic drops in fertilizer, which came down 5.9%, and 5.9% drops in cereals prices. Oils are down 3%. This is shorter than the 2.7 that they were. The only growing parts are meat prices are up 0.9%, sugar prices are up 1.7%, and also 6.9%. Sugar is one of the only growing parts of the global economy in terms of prices. So that's good for companies like Zambia Sugar who export sugar. And also beverage prices. Beverages, when I talk about this, I'm not talking about alcoholic beverages. I'm talking about tea and coffee. Okay, those beverages, the ones that we don't have to put a no under 18 sticker on. Those ones are going at are rising at about 0.1%. And the previous month we saw them going up by 5%. But general parts of the kitchen table, so the risks of imported inflation are starting to decline because general food is starting to come down. The only problem that we're facing was our FX rate, which is also taking a trip down memory lane and starting to sink downwards. So I think we're starting to see some changes there. But remember, we're getting towards the end of tax season. So this could be either tax intervention, but we're not seeing what is driving it. Everybody's trying to pick up what it is that has been causing the kwacha to start sliding down. They're saying maybe it's the central bank intervening, but the central bank was intervening in December. The central bank has been intervening this whole time, and they have not been working at it. So lower inflation is actually lower food inflation in US dollars in terms of food might actually support the slowing down of food inflation that we've seen even in March here. So we can expect slower food inflation coming in probably in the months of April and May. So the food the food inflation valley should be a little bit stronger because of costs. As you can see here, also adding to this, you're also seeing energy prices are starting to slow down as well. And also you're seeing food. But remember that we've also got OPEC who is pushing oil prices up at the same time. These are our charts that we've seen for global food inflation month on month and how it's been trending. As you can see, most of it has been deflationary. Food has been deflationary for the past 12 months. Prices have actually been coming down on the global environment in US dollars for the past 12 months. Beverage prices are the only ones in terms of tea and coffee for what? So watch out for your imported teas and your imported coffees. Those are going to be a little bit more expensive because they're still gathering some momentum in terms of prices. But fertilizer prices at the end of the season are also starting to come down. We had a lot of strong fertilizer prices previously, but that's also starting to come down. And that's even in the negative. So negative fertilizer prices, oil prices, and we're talking about energy prices. We're talking mainly about things like coal as well. Coal and liquefied gas. Those are important prices that are also starting to come down. Now, on an annual level, this is year-on-year costs. We're starting to see that year-on-year trends, we're seeing deflation across everything except sugar. Okay, so everything's prices in dollars is come down drastically. Food prices globally are down 20% in dollars versus 8% was that we're standing at last year. So 20% decline in inflation. Oils prices are almost half of what they were. These are your soya oils, your different kinds of oil. Fertilizer is down 32% from where it was last year, and energy prices are also coming down as low as 37%. Remember Brent oil prices last year around this time at the beginning of the Russia-Ukraine war were way above 100, heading towards 120. Now we're sitting at around 85. So we've lost about a third of that. So that's actually good for us in terms of our costs in general. But it is sugar prices. So this is actually good for the sugar stocks. Remember, we're trying to export our sugar. So if sugar prices are up 7% year on year versus last year, that's actually good for us, Vernon, in terms of if you have invested in that stock and what it's probably showing for the export prices. But it may also cause a little bit of sugar inflation. If you're seeing sugar prices globally going up, the main sugar provider is the one exporting, and then they're also trying to balance where they're going to be making the most of their money from. So that's going to be a bit of a challenge here in terms of food. But food prices globally are starting to come down. We should expect the same. Now, we have been seeing that in terms of our kitchen table index. We have seen food prices, in terms of food prices in general, the kitchen table prices are starting to come down, especially even maize prices starting to come down. But we're having a problem, obviously, with supply and balancing whether we should be exporting or holding it in. And we're trying to avoid not exporting because we're trying to also bring in export revenue. Remember, we're on track to cross $1 billion worth of export revenue this year alone. So we're trying to make sure that that gets upheld. because we're probably on track to cross over into probably about $1.1 billion worth of agri export by the end of the year. That's the target that we're probably looking at, with the goal of getting by 2026 to $2 billion of agri export per year. And this is just how it's looking in terms of annual inflation. As you can see, annual inflation year on year is now coming down. We were at a point in April 2022 where fertilizer prices were up 150%. As you can see, that brown line there is your fertilizer prices. They were up 150% globally. Everything now is down 30%, except beverages, which are only down 2%. So your teas and coffees, the ones that are going to be imported, they're only down about 2% from where they were year on year, while you got a dollar that's still very weak. So that's why you're seeing inflation in those ones. But the rest of them, your food prices coming in are down 20%, your fertilizer prices are down 32%, and your energy prices are down 37% from where they were year on year last year. So this is some good data for us to be looking at. Other pieces of information, Vernon, that we should be paying attention to. Why is it that OPEC is pushing prices up? Why? Because Saudis have been making money, Vernon. Money from high prices of oil. Take a look at the prices of oil at the end of 2021. Remember that it was up, getting towards about $110 billion. This is the profits of Saudi Aramco in US dollars over the past 5 years, past 6 years actually. But yeah, if you're looking 5 years back, they made record profits. These are the highest profits. 100. This is not revenue, Vernon. Profit. Okay. The amount of money after they've paid salaries, after they've paid interest, this is the net income of the Saudi Arabian oil company, which has now made $161 billion. It is officially the most profitable company in the world. Okay, so in a time of record profits happening, Saudi Aramco cranked 161 billion, Vernon, billion. Just to put that in your mind, the Zambian GDP, okay, is less than 20. So that is 8 years of Zambian economic activity in 1 year of profits sitting in the Saudis right there. That's how much money. By the way, can we not just talk to these guys to sort out our debt? I mean, can't we just, just do a deal with these guys if they're trying to diversify? I mean, if they're sitting on 160, Vernon, what's $14 billion to 161 billion? I'm just saying.
You can imagine.
This,
Hmm.
these are the deals we should be talking about.
We need to be friends with these guys.
No, I'm just saying these are the deals, and this is the must again. If debt just continues like this, and remember that we're currently sitting in a situation where our next IMF payment is contingent, Vernon, on us being able to get our money from, a credit deal already done. So already in trouble here. We're in serious trouble. My chart of the day for all of our
I don't even want to talk about the IMF right now.
Everyone's at beef with them. The chart of the day, Vernon, today has got to do with avocados. If you're looking here, this is the global avocado production trend. And according to the World Economic Forum, Colombia might soon pass Asia and Africa in terms of production of avocados. We are slowing down. If you're looking very carefully, just at the bottom of this graph, you notice that there's this orange line here. That is Colombia. Africa is this light blue line here, which was overtaken by Asia just even over the last 5 years. Now, if you're looking at the avocado market, obviously it's dominated by Mexico, and Mexico's biggest client is America. So trying to look at where our avocado industry is going, perhaps as Zambia, we should also be remembering that is one of the things that we want to try and get into as much as possible, because it is something that the world is looking to. Kenya has actually done a lot in terms of avocado export. And on the other side of the break, I suspect, on the other side of the break, I will give you the figures on what Kenya has actually been doing in terms of avocado export and how that's actually served them before we get into our topic of discussion. So catch you on the other side, man.
And welcome back. Of course, just winding up in our last minute of behind the markets today. Alrighty.
All right. Right, thank you very much, Vernon. And now, as we try to wind up, I was talking about the fact that Kenya has been exporting about $140 million worth of avocados as of 2021 data. They did say that, yeah, Kenya exported 95,000 metric tons of fresh avocados worth $141 million as of 2021. You have an avocado market globally that is currently sitting in the billions. Okay, we're talking about 15 to 20 billion dollars worth of avocados, and the biggest avocado buyer, actually, Vernon, is China. That's actually one of the biggest ones that we may not pay attention to. So, a quick topic of discussion today for everybody who wants to pay attention today, it's mistakes that you can make. Remember, we have been talking about mistakes a lot, Vernon. So, one mistake I want to talk about with people, as I've talked about there, is don't mess with the avocado market. Mistakes that people make per age, financial mistakes, and we want you to learn of them and learn from them. So the first mistake that you obviously have to look at, Vernon, in your 20s, and I'm really going to talk about your 20s and 30s, is a lack of knowledge and a fear of missing out. People in our 20s, we are hot-blooded and we have a lack of knowledge, and therefore the biggest fear, and I'm going to deal with these in terms of fears, falsehoods, and forces. The fears that you go through, Vernon, is that you want to YOLO. You may not live to retirement, so you decide, I'm just going to eat my money. Remember our friend who said, "What happened to your money?" I ate the money. Okay. That is where there's a likelihood that you can end up. So people eating their money because they fear they may not make it to retirement, then they end up in retirement destitute and they have nothing. They've kept on withdrawing their savings balances. Every time they switch jobs, they kept on withdrawing their gratuities, spent it, kept on withdrawing their pension, spent it, and then what happens? They retire with nothing. Falsehoods, Vernon, that you often think is that consumer brands are a sign of success. No, it's often a sign that you're just poor at managing money. That's usually what happens, because those consumer brands, whether it's your sneakers, whatever things, are not going to take you into retirement. You won't be able to eat them and you'll suffer at their hands. Expensive degrees equal higher pays. This is also another falsehood that people fall victim to, and they end up getting huge student loans with poor ROI. The expense of your degree does not equal a higher pay. In fact, some of the cheapest courses you can start taking are the things that are actually getting people paid, especially things in computer science today. Social media marketing is something where people are actually making quite a bit of money already, and those people have also got very low expense in terms of their education. Do not be fooled to think that the more expensive your degree, the higher you're going to get paid, and then you start your life with an insurmountable student debt of 10 years to try and get out of this. Small credit payments are harmless. That is a falsehood in your 20s. The reason I say that is because you are probably you're losing out on the time power of your money. So every small 100 kwacha, 200 kwacha you can put to your retirement money, that's actually a good idea, at least your transition money. The other thing that you also want to look at during this period of your life, especially if you're trying to look at what works best, is the forces. You're going to try and be forced to make purchases to fit in. Young people a lot try to go into virtue signaling, and that often costs them money and it costs them time. Yeah, they're becoming a social justice warrior online instead of using online to study and become better. You are wasting time where you could become proficient at something. And I've seen a lot of youth wasting their energy on social justice causes they have no business getting involved in. And I'm not saying you shouldn't have any social justice. I'm just saying you're wasting a lot of your time. And then in your 30s, you become disgruntled, you become upset, you say the system doesn't work, and you spread your misery to everyone when you should have just used your 20s to become much better and become more experienced at things. Expensive weddings are often something people feel that they're forced to do, especially if they're degree holders, and they end up going into life in debt. And likely by the time you're 30, you're divorced because you started your life in debt, and your divorce rolls you back financially into your 20s instead of thinking, is this wedding worth it? Okay, both men and women need to think about that very carefully. Families must know I'm successful, especially, and also black tax, especially if you're the first graduate in your country, in your family. If you're the first one to go to college, there's usually that pressure to become the supplier and the provider for everyone. That usually becomes something that becomes insurmountable for many people who are looking at this. The other thing I also wanted to look, I want to look at is your 30s. Your 30s, the theme, Vernon, very quickly is your 30s are nothing but high school with bigger zeros and bigger competition. So that same mentality you had, the same mentality you Amayos have for high school, that is the mentality you go into your 30s with. But now you just got more money to be even more silly. Okay. So the biggest fears you're going to be facing are fears of your future. And there's a lot of fear mongering in adverts, especially financial services, insurance, all these. Also, because you've got a bit more money, you're a bit more fragile. You've got more to lose. So you become more worried. You've now got a car, you're worried about it. You've now got a house, you're worried about it. Because you own more stuff, you're more worried about things. And therefore, that leads you to do worry spending. Falsehoods are also the falsehood you face is more money. You start pursuing more money, but you're eating up a lot more of your time and you're under the illusion of wealth and you get stressed. Now, I'm not saying you shouldn't be utilizing your time for working hard, but you still need to work strategically and become more valuable. So, chasing only money without improving yourself over the time, that usually becomes a problem. Living a borrowed lifestyle. This is horrible in people's 30s, but it's so prevalent where people are paying for furniture, paying for a car, paying for a phone. Everything is a payment now, especially for those who have access to credit. They are living one of the most falsified, borrowed lifestyles you can ever see. Following affordability as opposed to wealth building. Everything you have is more about how affordable it is as opposed to building wealth. That is often the mistake that people make. An income focus, you're now focused on income. So your lifestyle should reflect your income and not your net worth. So having an income focus more than a net worth focus is also a big falsehood. There are lots of people who earn a lot of money, but they've got nothing on their balance sheet. You're idolizing them because you think they have a lot of money. But the moment they lose that job, they go straight into a horrible lifestyle. Meanwhile, the teacher who was saving their meager salary has actually got something in the background that even if they lost their job, they've actually got some form of stability. They've invested in something. They've actually built. I've got a lot of clients, Vernon, who are nurses and teachers who are actually making it work on lower salaries because they've sacrificed and they went and lived in these small towns outside where the cost of living is like 2,000 kwacha a month. And they're able now to take their 6,000 kwacha salary and invest about 2,000 of it and start building wealth. While those of us who are living in fancy places earning 20, 30,000 are now struggling to still save and invest that 20, 30,000 because we can't imagine living in a small town outside of Lusaka because what lifestyle is there? Soft life, brother, soft life. And then the forces that drive us are trying to keep up. We're focused on child experiences. By this time, people have children. We're focused on child experiences instead of giving them life education because life education is more important. There are tithing competitions in churches that you're seeing for people in their 30s. Now that I'm no longer a kid who doesn't have much money, the pastor must know I'm working well. The pastor and the church must know that I'm doing well. So I'm here to keep blessing the house of the Lord beyond what I can afford. And lavish weddings. People who get married in their 30s are always trying to do things very lavish. These are mistakes people are making, Vernon. If you're wise, learn from the mistakes of others. Do not become the mistake we must learn from. When you're in your 40s, going to 49, mortality becomes a real issue. You're getting through a midlife crisis. You're now starting to realize that, hold on, my work life is starting to end. So you now start to attempt to catch up on wealth fast because you haven't. So you're now you're more susceptible to being swindled. So because of your fear of trying to play wealth catch up, you're more susceptible. If you young people think that you get swindled, we're talking about numbers in the 50s to the hundreds of thousands is what happens to people in their 40s. They get swindled badly, Vernon. I'm not even joking with you. They get swindled badly. People also try to negate spending, especially those who are aging. Those who are single in their 40s to 49, they often spend a lot of money on cosmetic things to try and make them look younger, and because they're trying to keep their glory days in. And unfortunately, that's a lot of money that goes down the tube. They're silly purchases because people can afford payments rather than looking at it. People will come to you and say, "But I can afford the payments." Yeah, but do you have to buy it? That's the thing you have to ask people. The falsehoods that people live under is high costing colleges equals high employment. I've seen the master's degrees people are going for. Those are things that people think are going to pay them highly. Yes, the average master's holder gets paid 21,000 kwacha, but those things are heavily expensive and trying to repay them can sometimes be a trouble. Please make sure you've got your professional certificates, especially at that time. Thinking you have made it in life and then thinking there's nothing going on, so you're trying to bring more excitement. The thing, Vernon, is from your teenage years to your 20s is a big transition. From your 20s to your 30s is your big transition. from the 30s onwards is not a big transition. So people end up trying to make big transitions and make big changes in their life. And then all of a sudden they end up spending themselves into a hole. Another thing to also tell people, of force in life, free is not free. Okay, everything free comes at a cost. Please remember that every free thing is a hook. You get hooked a lot on purchases by free things. Be careful about free. Trying to do epic journeys because you're feeling this force to build memories with your families. We have to take this huge vacation because I'm in my 40s. I can't just go to a local place. Me, I need to go to an international because I'm in my 40s. No, because you have the money. That's what you need to make sure of. Lifestyle upgrades and just because I can mentality often gets people during this period, Vernon. And finally, your 50s, which is the final phase, the fear of getting to retirement. Often people start purchasing poor assets, trying to start businesses they have no knowledge in at all. Then they end up getting swiped because they go into retirement poorly. Someone decides they're a farmer today, they've got no skill at all in that area. And then they get wired when they get into it. The other fear is that people start owning farm properties for retirement. They don't know how to farm at all, and they go into bankruptcy. They end up taking on more costs in retirement than they could ever experience. Falsehoods that people work under is that your extended family is going to work in your best interest. That is why, people, you must have a will for your assets, or else you think your extended family are going to work in your best interest. Wait until you see these dissolution of assets situations. Financing properties for cash flow with limited time to pay for it. Those are usually a problem people face. Unplanned huge church trips and donations, because we have what we call gateway to heaven spending. People realize the end of their life is coming. Maybe they haven't been as good to God as they thought, and they think maybe if I just throw a bit more money at God, He'll love me before as I enter the gates, and He'll be friendly towards me. So we have what we call end of life mortality spending and expensive children's weddings to prove to the world that you are rich. There are mistakes you're going to make. Please look at these, learn from them. But Dave Ramsey does say this in our quote of the day, Vernon, as I try to slow it down. When you lose money due to bad financial decisions, don't beat yourself up. Count that as tuition to the school of life. Learn your lesson and become vigilant not to repeat the same mistakes. So if you do catch yourself making these mistakes, don't beat yourself up. It happens. You're human. We're all emotional. We do things because there are various things pressing and pushing at us. But you can recover from mistakes if you are just willing to humble yourself to them, learn where you went wrong, and just make them. But we put those out there so that you see the common mistakes people make. I can tell you people make these mistakes, but if you'd like to go and make them yourself, by all means, you're allowed to go and do them. But as I say, count your losses as tuition to the school of life. That is what I give you as our topic of discussion, our quote of the day. Have a wonderful day.
Thank you so much. To have a wonderful day.
All right.